So, yep. All right. Looks like it's working. So, yeah, definitely did some sweet due diligence at Texas Roadhouse yesterday. I'm bullish on the honey butter and the sweet fresh baked dinner rolls. And
Right after earnings season too. That's
well,
big.
got to celebrate my Intel stock being up so much, right?
Oh, we got to talk about that. It's painful.
It's painful if you sold at the bottom.
Yeah, yeah.
Oof. Yeah, I mean, it is what it is, right? Like, speaking of that, I thought it might be fun to talk about some of the worst investments we've ever made.
Oh boy.
Yeah,
This will be good. This will be a really good one, actually. Yeah.
yeah. So, you know what? I'll break the ice and I'll start here. So, as far as like worst things I ever bought, as far as like worst reasons and worst results, um, I bought shares of Wish once. Yep,
Wish.
yep. So I think that might be. I mean, if it's not the worst, it's definitely close to it. I don't have it anymore, obviously. But yeah, I kind of I was kind of going along with that rush of the AMC era of 2021, and
I remember that.
I 11x'd on a few $100 I put into AMC, so I thought I was the man, and that Wish was going to be the next one, and it wasn't, and it was dumb. So there you go. But I didn't put much into it. It was just one of those things where it's like I was kind of treating it like a casino
Oh
in a
yeah, I
lot of
know.
ways.
I know what you
Yeah.
mean.
Um, Everybody thought everything was going to be the next squeeze. And that's really the thing that made me start to rethink how I view investing in stocks in general. Though it's like it kind of it made me take a step back and realize like, hey, like this isn't something you can consistently rely on just because it happened the
Yeah.
once. Sometimes getting lucky on one investment can actually be the worst thing that ever happens to you because then
You're
you
right.
mistake being lucky with being good.
Mm-hmm.
And I'm glad that the next sort of because AMC was kind of a dumb thing to do. Also, it just happened to work out. And so learning that lesson early on and rethinking before I really put that much money into stocks, probably a good thing because going and thinking you're the man because the first dumb thing you happen to do happens to pay off isn't going to do a lot for you for, decades and decades. If you keep doing that for
Yeah.
20 years, you never get anywhere at best and you go broke at worst.
Oh, we have some real buffoons in the comment section already coming at us.
Oh, Alex. A
Yeah. Rezzy's.
clown. You're straight up bozo.
Well,
That's
he's
right.
he's making pizzas right now while I'm teaching private mastermind live streams. So
Oh, gotcha. So, now that I have bared all, what do you think the worst stock you've ever bought was?
man, we have some doozies. Does it have to be at a? Could I have sold out at like? It doesn't have to be a horrible loss, right?
No, no, not a
Okay.
horrible loss. No,
So the obvious one's Tattooed Chef, but I think that's almost too obvious. Um,
right?
I viewed that as gambling money. I took my loss on the chin. I could easily say and blame Jeremy, and I partially do still, but
Yeah,
he very easily hyped it up. I was in a vulnerable spot at the time, but I knew the risk. I only bought 3 shares, so that's
yeah.
definitely the
It's not the end
worst.
of the world. Not going to take you out
But
of the
when it
game
comes
for
to like
sure.
it comes to it comes to like actual stocks, I'd say we've hit AT&T's got to be up there. Even though I sold out at a really solid time. Wow, trying to hurt our
Wow,
trying to
wow,
hurt
wow.
our viewer retention.
Yeah, definitely. So you think AT&T, like out of the like non meme type stocks, you think AT&T is your
AT&T,
worst?
Chegg. I invested in Chegg. I only
Ooh,
owned a
oh
little
yeah,
bit,
that's a rough one. Yeah. Um,
but I sold out at a really good time, and I bought Apple with it, so I'm up there.
Gotcha. So, out of the stocks that are, kind of talked about and in the limelight today, what do you think are some of the worst investments out there
They got to be
currently?
dividend stock. Can they be like in the dividend community or just generally?
Just generally, like just stuff that's like generally talked about a lot these days. Like it could be the next this or the next that. Maybe gets more attention than it deserves, and people buy it because it's name recognition over maybe financial substance.
Palantir.
Oh, I feel so attacked.
I know you own Palantir, right?
If we're going that direction, I mean, maybe, I mean, you why
I just
Palantir?
don't
Not
completely.
SoFi?
SoFi too. I don't.
Yeah.
It's just those like small, there's like hyped up stocks from 2021 that
Yeah.
are still somehow around. I'm looking
Well-
at Palantir's financials right now. They don't 183 million of free cash flow, not very profitable. Like what's the bull thesis with Palantir?
Well, you mean other than just
I know
saying
they
the
have-
words AI?
Yeah, I know they have like the government
Well,
contracts.
yeah, government contracts tend to be sticky. They have really high gross margins, as companies like that tend to have, with double-digit revenue growth. So the thought is, if they're growing revenue at double digits and they have high gross margins, that eventually translates into ever higher and higher profits, right? Especially now that they've gone past the break-even point, you would think that a greater and greater amount, because their general and admin and stuff like that isn't going to scale up with their revenue. So more and more of that gross profit, once they basically overcome their overhead, becomes bottom line profit. And you can look at, whatever they're worth, like the different analyst projections and stuff for that, to get an idea of what those numbers might be. But, I waited until it looked like they were on the verge of GAAP profitability, as well as it was either 8 or 9 quarters of consecutive free cash flow. So unlike a lot of the other, like, more, maybe let's call them what they are, more speculative companies out there. And I'm not going to sit here and say Palantir wasn't a little bit speculative to get into. But at least if you can come up with like a good financial justification to put a very small percentage of your portfolio into something like that, I think that's how companies like that should be treated. There's a lot of potential. Yeah, we use the word potential a lot with companies like this, and some people bet the farm on potential. I think, I went in for like less than 0.5% as like the position size for it. So it's like, a lot of potential. That 0.5% has grown to be more like 2.5 to 3%, just because the price has been run up. And I certainly wouldn't buy it again at the current price, which is why I'm writing covered calls on the 100 shares I have now, because I might as well get the premium while it's overpriced. But I'll say I'm right if it's looking good in 5-10 years, not if it's looking good next quarter or the quarter after, right?
Yeah.
For me, that on that same token, I probably would put SoFi more into that category. As far as I know, they aren't GAAP profitable yet, and aren't terribly close to GAAP profitability. Another one that I think is much closer to going the way of Tattooed Chef than people want to acknowledge is Oatly. I did a video on them.
Mention that.
Yeah. I didn't get as much push. Like, some people push back that they actually use and like the Oatly product, and I've heard that that they have like and you can, and I don't know if there's any like coffee enthusiasts in the chat that can confirm this, but I've heard that oat milk is popular with the coffee crowd because it has the best foam factor of any of the dairy substitutes out there. And so, if they want a nice foamy whatever at Starbucks or whatever, mom and pop coffee shop, they prefer oat milk. So
I'm sure Rezi will answer that in the comments for us.
Well, a little something about Starbucks. Is that true?
Oh,
Is oat milk the way of the future when it comes to dairy substitutes?
I would not know. I'm an avid Starbucks and coffee consumer, but I only drink like cream and sugar and vanilla.
Gotcha.
Boring stuff.
So you use like full dairy creamer, huh?
Yeah,
All right. I mean, hey,
boring stuff.
that's what a real man drinks.
Yeah, that's what I'm saying.
Actually, Arnold Schwarzenegger, he actually has this quote from his movie Pumping Iron where he kind of disagrees with that. He says, "Milk is for babies. When we get older, we have to drink beer." Genuine Arnold Schwarzenegger quote.
It's a Germany moment.
Yeah. Speaking of beer, Bud. So I was at the grocery store and
Real research.
I was doing some market research and I noticed that nobody was touching the Bud Light over at the store. So what does this mean? Should I infer anything at all from that? Should I have just sat there and waited longer with my camera out in case somebody started to like look at it?
How long did you sit on the aisle for?
Yeah, I mean maybe like a 2-3 minutes.
Oh, that's nothing. That's nothing. We need a real private mastermind Discord.
Should have pretended to walk up and down the aisle for like. Should have done it for like 20-30 minutes. Make sure I really, scoped out every single person browsing for beer that day.
Yeah. Not enough data.
No. So that's not correct. So Bud Light is a subsidiary of Anheuser-Busch InBev, right? It's just one of the brands they own. The ticker is Bud, but the actual company is called Anheuser-Busch InBev. And as far as I know, they don't own Modelo.
Yeah, I don't.
So I'm not sure where. I'm not sure where he's getting that. Grupo Modelo. No, Modelo is not.
Buying a cup of coffee at a place like Starbucks or Dunkin' is a horrible $7 to $8 per cup. That's a little pricey. I don't think it's $7 to $8. It's closer to $3 to $5. But I think if you get like the fancy drinks, it's closer to the $6 range. If you drink the real man stuff like me, it's $3. And you got to look at the main reason I do it. I will admit here, I am an addict. I am an addict to the full extent. But I am way more productive when I got caffeine in me. I become ritualistic that way.
Yeah, so
and I think people are worse than me.
So a quick little bit of research on the Modelo thing. It looks like what is it? Grupo Modelo is partly owned or was partly owned by Anheuser-Busch, and they wanted to buy them out but got blocked. So maybe that's where that probably came from, the fact that they tried to buy them out at one point. I could see how that could, and yeah, it doesn't help that if you search who owns Modelo, InBev comes up as one of the parent organizations because they have like a partial stake or something. So that's probably where that's coming from. But no, they don't control it or own it outright. But let's see. But they are the number one brand in North America now. They did supplant Bud Light. I don't even think is in the top 3 anymore. So
they had a Modelo ad on during UFC last night.
Oh yeah. So a lot of people are wondering, how is it going to play when Bud Light tries to advertise? Is like the NFL going to let them and that kind of thing?
Oh, I wouldn't know.
Yeah, I don't either. I mean, I don't know. They might want to just stay away. If I was the NFL, I'd probably want to stay out of that one.
They should do like an ad with like Jason Aldean now, like a far right, and do like a far right ad, like the complete opposite of what they did.
Balance it out, right? Fair and balanced, like all things should be. Yeah. I was under the impression that Bud owned Modelo, and no, it's a little more complicated than that. Because at that point they would kind of have I mean, they own a lot of different brands, but it would kind of be a monopoly type concern at that point, because then there's only like one competitor,
Yeah.
which is Molson Coors, and then you know if you own more than a certain percentage of a given market, the FTC tends to be a little bit sticklers, and the people in charge of them right now, Ryan mentioned this last time. They don't
Ooh.
they're not very what we would call business friendly, right?
No.
Right.
Especially
Okay.
if you're a tech company.
Yeah. Greetings from Canada. Well, greetings from the very very hot sweltering oven that is known as Arizona.
Yeah.
So, other than stocks, what do you think the worst investment somebody could make is today?
That's good. Crypto. I'd say crypto.
Oh, you and I have the same answer to that question. Yeah,
I was gonna say NFTs, but I feel like that's too easy. Like
I think you can lump them
past
into
its
one
bubble.
thing. It's blockchain. It's just anything that's based on
yeah.
anything that's based on blockchain. Yeah. So if in case anybody is angrily rage exiting the thing from us saying that,
Yeah.
the problem gambling, that's kind of
Resonating
what it
with
is,
that.
right?
Yeah.
So the reason I say that is I think, unlike even investing in a bad stock, at least there's an underlying business there that could potentially become profitable someday. Except for if you invest in Wish, of course. But I think with crypto, like, and again, like, I've tried to get somebody to answer this in a way that makes any kind of sense to like a normal person, but how do you value it? To me, it's the same as like buying, like stamps or gold coins, just they're not even tangible.
Yeah.
Yeah. Like, at least tangible gold coins are shiny and you can enjoy them, I guess. But I mean, your crypto is literally a number in an account. And a lot of the people that invest in it because they don't like American currency, their criticism of American currency and most currencies in the world that aren't backed by a gold standard is that, oh well, those are just numbers on a ledger in an account.
Isn't the big thing for crypto though, like it's untraceable, like the receipt and stuff?
So it's actually, so as far as like, there's actually a lot of transparency with regards to like which specific coins went to which wallet. But the wallets can be owned anonymously if they're like not on a big exchange. So they can be anonymous from that perspective. But if you like look into the different transfers that go in and out of like different wallets, you can find which wallets are connected and like who's in there and like which wallets are in their network. And if you figure out who owns the wallet, it then becomes very obvious who's doing what. I sometimes will watch like a random CoffeeZilla video because he busts like people who are scammers with regards to crypto and NFT a lot.
Mm-hmm.
And there's ways that they can look into that kind of thing. But I think one of the big appeals is supposed to be a hedge against inflation, where, and this is funny, the times when inflation went up the most in the last couple of years are the times where Bitcoin price has dropped the most. Go figure. And that's
we are accepting Bitcoin for our private mastermind Discord. By the way,
that is true.
And we're going to do an NFT project soon.
Only one Bitcoin to enter.
I'm drawing the Bitcoin, or I'm drawing the NFT over there.
Or you can do 5 Ethereum. We'll take that too. Yeah. But we don't accept Doge or Shiba Inu. Yeah, Bitcoin's totally traceable. Yeah. There, like I said, there's ways to track it down in a lot of cases. Now I do know that like if you have it stored on like what's called a cold wallet, which is basically like a hard drive, as long as you don't lose the hard drive, you can wait as long as you want, and as long as it doesn't become corrupted or anything, you can get the crypto back off of the hard drive or whatever. But I
But
don't
we're
know.
sponsored by them too. That's coming soon. So
Yeah, actually, yeah, we're totally sponsored. They only paid us like 20 grand
yeah,
to sponsor, but we don't do it for the money. We do it to help you.
yeah. Well, get your free stock. Link in the description.
Oh yeah, get your
20
free stock.
stocks with a deposit of $50.
You can get up to $1,500 in free stocks by signing up to Moomoo and Webull and Robinhood with our links. Actually, I was thinking about getting into Webull because the referral rewards on that are pretty sick.
And you do have to put your social security on there. Just because it's that good of a deal, they don't want you scamming them.
Yeah, that's true. Bitcoin price usually traces the costs to mine 1 Bitcoin, which is the only thing I could see is accurate. Oh, yeah. And by cost to mine, so for anybody that doesn't know how it works, you basically have to have like a server farm using a lot of electricity to do the computing work to generate fractions of Bitcoin, basically. And so I guess Dividend Dude is saying that the cost of that electricity is the thing that's that appears to be driving the price. But then it's like, what value is the coin itself adding in that case? If you're just burning a bunch of using a bunch of juice to do a bunch of basically computer busy work to generate some ones and zeros in cyberspace and call it money.
What a life of the guy that runs the Bitcoin farm. You just wake up, you go in the basement.
Oh, yeah,
it's like 120 degrees down there.
There was a little trend I saw. I haven't seen one of these videos in a while, but there were people like influencers with like literally like 200, 300,000 subscribers saying that they were claiming that they had been testing out these like crypto trading bots that were making them like 1-2% a day consistently or something like that. And it's like, I'm sorry, but if that was actually feasible long term, if you actually made that return and could compound that daily like that, it would take some absurdly short amount of time for you to have literally like all the money on earth and then some. Yeah. And so like I just wonder like who is falling, like, and I guess that goes back to the whole people who are into that area seem to be pretty illiterate when it comes to economics, financials, and the way numbers and compounding interest work.
Pretty illiterate.
Yeah. Pretty illiterate. Yeah. I mean, here's the thing. Everybody pretty much universally says, and they'll name drop Warren Buffett as far as like what a legend he is, and like talk about his quotes and things like that. But then they'll sit here and pretend that they're selling something that would literally dwarf the results he's achieved over his career. Like, he became a legend by getting 19 or 20% for like a zillion years. That's why he's a legend. He's not a legend because he was getting 1% a day or 50% a year or 10xing in a month or anything like that. And I just wish that people would realize that like being Warren Buffett is more about just doing good decisions than the typical person for a really, really, really long time, year in, year out.
Yeah.
So.
Oh, I want to talk about Intel.
Yes.
Yeah, we got to get to that.
Yes, we do.
Pat Gelsinger needs to come in too to talk about the earnings report.
Yeah. I mean, speaking of crypto mining, I hear Intel has a chip for that now. Actually, I have no idea, but so yeah, Intel obviously on a little bit of a rip. because they had earnings that were better than expected, right? Everybody was expecting them to, be taking a pretty big L this quarter again, like they did the
Again.
last two. Yeah, last 2 quarters have been pretty big L's, and they've gone back into profitability. But is the cause? Is it really that much cause for celebration? Do you think the market's being irrational and that Intel actually deserved to be down there at 24, $25 a share?
Well, I wouldn't get too excited, Fiscal. This is CEO Pat Gelsinger talking. Unfortunately, we had a solid earnings report with diluted EPS of 34 cents. We missed revenue expectations by 25%. We do have a healthy and sustainable dividend, and we're incorporating artificial intelligence into our systems.
Yeah. So obviously, like, I'm not going to sit here and cry because my stock went up or anything, but I don't think that the price movement matches the results necessarily. So it is what it is. I do think it's still undervalued. I think the initial drop down to how down to its all-time lows, or recent lows, I guess you could say. They may not be the all-time lows. They may have gone lower during.
What were the big takeaways from the earnings report? I just saw they mentioned AI a bunch of times.
So the takeaways were that they managed to get back to profitability. Personal computing demand didn't stay as low as they thought it would stay, and that's the big driver of it. And they have this this technology that lets them tie different chips together, and they've been talking about that for a while though. And basically, by tying more chips together, they can get a big performance boost, and basically have chips that are like specifically good at running specific tasks. And they did at that time mention that kind of capability would be important for the future of emerging technologies such as artificial intelligence. Also, their foundry business was up like 300% in revenue. People are taking notice of. I mean, but we're talking about Intel, which is like a tens and tens of billions of dollars of revenue company, and we're talking about something going from like 50 million to like 250 million or something like that, right? So we're not talking about a segment that was doing like 3 or 4 billion going to like 10 or 12 or something like that. Yeah.
Oh, I'm being called out here on my Intel. You made a video to sell Intel over a month ago, and they've gone up since that Ryan Little call out. Yeah.
Well, okay. So
I still stand by that video too.
So here's the thing. I mean, hey, like, if you feel like it's, not that it's a turnaround that's not ever going to turn around, and you think you have a better use for that money at the point where your investment thesis doesn't hold up anymore, is the time to consider reallocating the capital.
Yeah.
I went into Intel anticipating pain. Now it got worse than I expected, granted, but nothing happened that actually shattered my perception of what their plan was going forward. Because the big picture stuff seemed to all be on target. So that's why I held and, actually continued to sell puts at the bottom. Because, well, what can I say? I kind of have like ice water running through my veins when it comes to these things, but
Private Mastermind Discord, learn how to do it.
I used to play poker. So like, you have to, one thing you need to have to be effective in that game is some control over your emotions. And actually, that's one of the things, to bring it back to Daddy Buffett. he says that taking your emotions out of your investing decisions is one of the most important things. The temperament is the thing that you can't teach, right? You can teach the financial statements and discounted cash flow and any of that kind of thing, but you can't teach somebody like how to be zen or how to take their emotions out of their decision making. And nobody 100% takes their emotions out of the decision making.
Oh yeah.
Like, you can minimize them. It's really just about bringing it down from your emotions dictating all of your decisions as close to zero as you can, but nobody succeeds 100% of the time at having their emotions have zero impact on their decisions.
Two things. I used to be a real emotional buyer back in the day, which actually has worked for me because I have some positions that I bought into when I was emotional, and I've done really, really well on them. But that's one of the things I think I've really grown as an investor recently. Is just being like somebody makes like a UNH stock video, and I'm convinced about the stock. I'm not buying.
Yeah. So Intel is a disaster clown stock.
All right. The thing with Intel too, this is the other thing. I don't think it is. I think there's still a chance it could recover. I messed up when I initially bought. I took the loss on the chin. I'm just done, for me at least. I don't think this is bad for anybody else, but I'm just done buying turnaround stocks. Companies that, like the Walgreenses, the companies that have seen their glory days, but now look at them and they're making a comeback.
I almost have a hard time even considering Intel like as a turnaround in the sense of other turnarounds. Like, they're still, like, if you look at their revenue, what percentage of the market they have. I mean, the fact that people have been saying AMD is going to put them out of business for 2 decades and it hasn't happened, and AMD is actually still a smaller company in terms of revenue, but I think their market cap greatly exceeds Intel today, if I'm not mistaken. Yeah, I just think it's a much better value than people give it credit for. And the people saying that it's bad are people that are too granularly focused on the R&D and the technology. All right. It's the Coke and Pepsi analogy. All right. You can say one makes the better cola, but it doesn't make them the better investment.
Yeah.
And Intel, you could say somebody makes a better chip, but Intel may well be the best investment because they have the capability of producing value for their shareholders. I don't give a shit about the quality of their chips if they make money.
Mm-hmm. Yeah.
So, I mean, I'm just being 100%.
That's how it is with like McDonald's and other restaurant companies, I feel too. Because I've seen a lot of shit towards like McDonald's. Because their food isn't the highest quality.
Yeah.
So they could be putting lead into their food for all I care, as long as it doesn't get them caught.
As an investor, you mean? As an investor, yeah. Obviously not as a consumer, but the people that generally, really, really like the stocks as far as NVIDIA, AMD, these are people who probably grew up as gamers, and so they recognize those brands as gamer friendly. And AMD used to offer something along the lines of like a comparable performance for a lower price point, and that was teenager me building a computer, I preferred AMD for that reason, right? But adult me is sitting here looking at 2 different companies to put my investing capital in, and I see one trading at extremely low multiples, at paying dividends, buying back shares, and having an ambitious plan to recapture growth that they haven't seen in a long time, while still being the biggest in that space in terms of revenue, right? And I say, is that a turnaround play, or is that just a company that was kind of getting a little stagnant, trying to break itself out of its stagnation and reignite new growth in their business?
Yeah.
I think that those are maybe 2 different things. Now, granted, they got a little lax on their R&D. They fell a little bit behind on the technology, but they got rid of the bean counter and put in Pat Gelsinger, And say what you will about Pat and his the way he, sort of says the wrong things all the time. It seems like he is passionate about the technology, at least.
Oh, definitely. He's the most. I think he's perfect guy for the job. I just don't know financially if he's the perfect guy for the job.
I view like maybe the previous stewardship, the bean counter. Maybe that's more of like if we were comparing this to Apple, maybe that's more like your Tim Cook sort, where it's they're solid, but the real visionary maybe is somebody more like a Gelsinger that really cares about the technology, like more like a Steve Jobs type. Not to say that he's in the same league or anything, but he's got that passion for like the device, the product, whatever it is that other people maybe don't have. And you need different leadership at different times at companies, right? After you've gotten to a certain size, you need the bean counter to get rid of the inefficiencies and things and actually drive profit. And when you're in a period of needing to reignite growth, you need that person that really has that vision for the research and development and technology and, that kind of thing. And I think that's usually two different people. There aren't too many CEOs that are both of those things in equal measure, You're
right.
So, other than Intel though, I think it's been a heck of a little run here lately. MPW, one of my favorites, seems to be back above my basis now. So my basis on that around $10 a share. And honestly, I know I probably talk about it a little bit too much, but
gotta get the views.
All right, so I take that back. As of Friday, I'm actually 1% below my basis on it. But I know. I should panic sell right now.
Yeah.
But I think that REITs, especially when they're below their net asset value and they're in what I would consider to be essential infrastructure, I think that there's this really magical thing that can happen with the value. I mean, it was close to 50% off of its net asset value at one point. It was down to $7.10 per share. And I just wonder like how it is that other people don't see it. Have you looked at MPW at all? I know you like your REITs.
I do like my REITs, but I'm not looking at it right now.
No?
Nah.
I've seen you talking a lot about Realty Income lately. So
big Realty Income.
How's the valuation looking on Realty Income right now?
I sent my stock review video for Realty Income. I think it's fair price, 68, 60, mid 60s, maybe 70s. A lot of analysts have it in the 70s, mid 70s. I like it little less conservative because you're not getting crazy growth. I like it long term. I think it's a good buy mid 60s.
So is that based on a dividend discount?
That's based on a couple different models that I averaged out.
Gotcha.
But it's currently trading 61.47. I'm not looking at it I'm not looking at it right now because I already have a lot, and it is lower growth. And at this point, I think it's better to, if I don't have if I already have a big enough position in it, I think it's just better to I'm trying to store some cash too. So
yeah, with interest rates going up a little bit, another quarter point, I would expect something like Realty Income to dip a little bit. So I don't know if you've ever heard anybody say that a certain stock trades more like a bond.
Yeah.
But I've heard that about Verizon in a lot of cases. I've heard that certainly about AT&T in the past. And I think Realty Income may fall into that category where people buy it because of the really, 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 what is perceived anyway as a really, really, really safe yield.
Yeah.
And so I would expect when interest rates go up, if they can get a similar yield from an actual bond, you would expect some people to just, reallocate there instead of having something like realty income.
Yeah.
But they're honestly, I mean, yes, they are pretty far down from some of their higher highs. I remember when they were in the 70s, not too terribly long ago.
Yeah.
And they were probably below 4% yield at that point. It was a really tough time to be enthusiastic about putting money in there. But lately, with it occasionally dipping below 60, I've got to admit it's kind of tempting. They've got a really good. They're an aristocrat, right?
Yeah, they are.
Yeah, and granted, the growth, the dividend growth has been a little bit underwhelming.
It's gotten a little better in the last few years. It's around in pace with inflation, so
like 3% or something like that recently.
4 to 5. 4 to 5.
Oh, so still mid-single digit increases. I mean, I won't say no to a 3 or 4% increase that I didn't have to do anything for.
Yeah.
Other than exist and hold shares.
Yeah.
Yeah. Yeah. I mean, I think it starts to look more attractive at the sub 60 level for sure.
If it got over to like 55 or 54, that's probably where I'd buy.
Gotcha.
I already have a decent amount, but that'd be a good price.
So which trading card game would you invest into if you had to choose? Like if you had to choose one trading card game to say buy $1,000 worth of cards with the expectation that they would at least retain their value, which trading card game would you go with?
Can't go with baseball cards, right?
No, we're talking trading card games like Pokemon, Yu-Gi-Oh!
Pokemon, yeah. Pokemon all day.
Really, Pokemon all day?
Brand value.
Like we're talking about buying the actual cards and expecting them to retain their worth.
I'm no game card. I'm no expert on cards, but I'd say Pokemon. They've had a resurgence too in the last couple of years. So
yeah, Pokemon was my jam when I was in middle school for sure.
Yeah.
I don't think the cards held their value though. Unfortunately, I remember going to like the local comic shop and Charizard. They wanted like $240 for a Charizard. I don't think I could get that for my Charizard today.
No,
I've held it
34 PE right there.
Yeah, I've held it for close to 25 years, and I don't think it's worth that. So that was a poor investment by younger me. Now maybe that's the worst investment I ever made. I don't know. Ooh, Cards Against Humanity. Have you ever played Cards Against Humanity?
No.
Oh my gosh, we should do if we ever do one of these and go into more of a for fun, definitely after dark style thing. We definitely need to play like virtual Cards Against Humanity somehow. It would be a riot, I guarantee it.
Private mastermind Cards Against Humanity.
Yes, that can be for members, channel members only. Link in the description, guys. You get to play Cards Against Humanity. Yeah. Oh, this guy's got a hot take. Canadian bank stocks are like Pokemon cards. You feel like you want to collect them all. So I don't know much about Canadian bank stocks. It sounds like he's saying good things about them there.
I have heard good things about them, but I have never got around to researching.
Yeah. I mean, I own two American banks. I have Key and Bank of America. I'm more happy with the Bank of America because it's also held by Berkshire. Key Bank, man, I was definitely a little worried about that one when all those banks were collapsing. It just seemed like anything could be the next one to go for a little bit there,
Yeah.
I don't tend to worry about like random price drops in stock, but when it seems like any day now, any random bank could just fold like like a piece of cheap lawn furniture or something, it's super easy to stress out about.
Yeah.
Oh, okay. 5 or 6 big banks here in Canada, which is why some would say that about Canadian banks.
So are you implying that they have some monopolistic type, a sixopoly?
Oligopoly.
Yeah.
Yeah. I like Canadian bank. They can't have a bank run. Is that because they're like fully insured by the government no matter what or something? That sounds like Canadian socialism to me.
Yeah, Shamir, I have a question regarding the Canadian banks. You're Canadian, so you could probably know this. Like, I know your government is not the greatest, and like long term, there could be some issues like regarding there. So, like, will the Canadian government impact the bank performance at all? Heavily
Well,
regulated.
I think any country you're in, the government can always affect the performance of any kind of.
Yeah.
Yeah, they can overregulate, they can underregulate. They can suddenly decide to make whatever it is you do against the law.
Yeah.
It's tough. They're heavily regulated. Now, what I'm curious about is, earlier you said you want to collect them all. The fact they're heavily regulated, are you saying that's been like a benefit to shareholders? Because here, shareholders usually view that as, if anything, a negative when a industry is heavily regulated.
It's good for consumers.
Yeah. So, okay.
The banks will always do what the government.
You see, I don't know if I want to invest in that.
Yeah, I don't.
See, here we're used to the government doing what the banks tell them to do.
Yeah.
Instead of the other way around. I don't know if I like that as a bank shareholder, I don't know. That might sound like some shameless capitalism, but yeah, as a shareholder, you kind of want a shameless capitalism in a lot of ways.
Yeah.
Because of the dividends and relative safety and how are the divvies? Give me a ticker. Are the divvies really that good? So one thing the Canadian housing market actually would have me questioning how profitable their banks can be. TD. So like TD Bank is in TD Ameritrade, like same company. Is that really a Canadian?
I think it.
That would be a today I learned if that was the case.
Yeah, it is. Toronto Dominion Bank. Wow.
That's cool. Are they but this is the same then it's
I am not liking what I'm seeing right now.
So the weird thing I'm like, maybe I'm just not educated on this, but
4.5 yield.
Yeah, is TD Ameritrade through them? Because I heard that Schwab bought Ameritrade, so like I'm maybe not aware of like how that relationship, what that is exactly. So yeah, the real estate's different. So I've heard that like in Toronto, for example, you can't even get a house for like under $1 million Canadian, which is pretty ridiculous.
Toronto's a dump too.
Have you
heard it here first?
You went to Canada recently, right?
Yeah, that was not a pleasurable experience. Toronto wasn't, at least.
Wow. All right, Toronto, you've been called out. You're a dump. All right, let's see. Okay, so TD Bank, not TD Ameritrade. So they're not related at all?
They have the same. They have the same exact
logo.
Logo, yeah.
Yeah, I was noticing that, but yeah, TD Ameritrade has been bought by Schwab. Now, my account hasn't switched over yet, but I mean,
Oh.
I was told it would happen sometime this year. So, TD has 12.5% of Schwab, but okay. See, this is the kind of thing like you gotta be familiar with the different companies to know. So,
Yeah.
all right, that makes sense, or it makes a little more sense. BMO, huh? BMO. That's how they say it internally. They call it BMO.
Are you looking to buy any companies after this week's earnings? Anything new?
Anything new? Well, after the due diligence I did on Texas Roadhouse, no, I'm just kidding.
Same there.
I'm not. I'm not gonna. Just in. So, how do you like your steak? That's all I'm gonna ask.
Medium rare.
All right, there we go. Where we had that. That's exactly how I ordered mine. I got the 23-ounce porterhouse.
Oh,
Yeah. Yeah. I don't do anything halfway. Yep. You know what? I'll post. I took a picture of the steak after I cut into it. I'll post it. I'll post it after the stream. Members of the Discord mastermind only, they get early access, you see, to my due diligence on that steak. But so far, like really the one stock I'm the most interested in playing with right now is actually Paramount. And I'm gonna stand up for that decision because earnings haven't, not a lot has really dropped on earnings, and that's really what I'm wanting to happen. I'm looking for chances to own companies at a discount, and unfortunately, this earnings season, most of the companies I've been interested in have ripped upwards instead of crashing downwards. So, but I'm sitting here looking at Paramount, kind of going sideways in like this 15 to 16 range. Now, because of the huge drops they've taken, options premium is disgustingly good on them right now. And the fact that the share price is relatively cheap means it's easy to sell a lot of options on them at different strike prices and expiration dates.
Mm-hmm.
And so I'm sitting here saying this is an opportunity to collect a bunch of premium, and if the stock stays or dips lower, get it at an even bigger discount. So, yeah.
I am looking at. So I added to my waste management position. They had a bit of a dip, and they don't usually. So I'm averaging down in there a little bit, adding that. I'm eyeing Texas Roadhouse. I like it at 105, 106 range. If it hits that, I will likely buy and continue to kind of wait. And then another one. You ready for this?
Yeah, I'm ready.
Domino's Pizza.
Ooh. So, all right. So I'm gonna actually defend you on Domino's a bit. I don't like them at their current valuation. However, I think that they have done a lot to drive long-term shareholder value, more so than what you would think. They've been kind of a sleeper hit in a lot of ways.
Yeah.
Like, you would not expect for them to have done what they've done. I mean, they've been around forever, and they just have somehow managed to just slowly inch their numbers up over a really long time. And they've never really been particularly hyped or anything like that. It's crazy to me. And people talk about McDonald's all the time, but Domino's is kind of everywhere too. And
you're right.
They keep managing to increase sales. And as cliche as it is, they do innovate. I remember you couldn't order online. They didn't have Uber Eats or anything. Domino's was the first place to have a modern online ordering platform. That was
another thing with Domino's. They're innovating. I know I'm copying a little off of Joseph Carlson here, but I've been of this bully for a while now. I think they're going to benefit heavily with like automation, robotics, and like AI. I think like seriously though, like I think they can really. I think restaurants are gonna and like restaurants and Kroger are gonna be the hidden winners of automation and all that.
Later, Shamir. It was nice having you on the stream.
Yep.
Always.
What a treat.
So I do want to address this comment. Screw SoFi, no free cash flow. So they actually got their bank charter, so they're a bank. I don't think anybody really values banks based on discounted cash flow. I think usually people go off price to tangible book. So now, granted, actually they were pretty reasonable on their price to tangible book when SoFi was at about $4 something a share. They may have been potentially at a discount at that time, but at the moment, that's the metric I've been looking at, and they're still at a premium on that metric because of the growth and the innovation and the technology and the rest of it.
Oh, Rezi's back.
Just to kind of put that out there, that different stocks, the valuation should be done differently. If we're talking about Domino's Pizza, happy to value it based on their free cash flow. But with banks, that's just not the accepted method. Just like you wouldn't do PE for a REIT, right?
Yeah.
It's funds from operations. It's dividend discount model because they're legally required for tax reasons to pay out 90% of their taxable income to shareholders. So dividend discount's a good measure for them, in my opinion. You could also do net asset value for a REIT. I actually prefer something like that, something like book value for especially an MREIT. Or you could do that for a BDC as well, because all of their assets are usually debt based. I'm a
big price to FFFO guy.
Yeah, but
I don't know if you've been paying attention to the
Kroger is a great business. I'm gonna
love Kroger here.
Yeah, I regret maybe not. Kroger and Sprouts. I made a video like in the very, very early days of the channel, looking at. It was a thing where I looked at 3 stocks, and Kroger and Sprouts were 2 of them. I don't know if I was just on a grocery store kick or what. I'm kicking myself a little bit on not getting some of both of those companies at that time because the value was looking pretty attractive.
Yeah. All right. So I don't know if you've been paying attention to the dividend Discord drama amongst the community this week, but we have moved from FC Canada to Rezi and Dividend Dude debating over credit card companies.
Oh, snap.
So we need to have there was a bit of a heated exchange. Actually, it wasn't heated at all, but it was a debate over a tweet that Dividend Dude put out. And I'll pull it up. I won't actually put it on the screen, but I'll read it out.
Okay.
Because it is a point of debate that was had. I gotta find it.
Yeah, I missed this one.
Credit card companies only make money because you do not pay off your debt in full. If you pay off your debt, there's no interest, and the credit card companies are losing money. Pay off your debt. So then that kind of led to a whole debate between Rezi and Dividend Dude regarding credit card companies.
I can tell you, all right, I've had credit cards longer than most of you have been alive. So let me tell you about. There's 2 different companies you're thinking of. You're thinking of, or the credit card company and the bank are 2 different things in most cases, except for Amex and Discover. But when you're talking about a Visa or a MasterCard, the credit card company, the Visa or the MasterCard, is a completely different entity from the issuing bank, which is like Bank of America. You could have a Bank of America Visa. In that instance, Bank of America is the bank, Visa is the credit card, right? One is the entity that holds the debt and issues the statement and everything, and the other is the payment processor.
Yeah.
Visa and MasterCard, they don't care if you hold a balance or not. They make money on the transaction. Now
Yeah.
your bank would rather you hold a balance and pay them interest, which is why they're issuing the card in the first place. But it's also your bank also wants you to be like in their ecosystem. That's one of the reasons why, they don't shut off accounts or charge annual fees if you don't pay interest, right?
Yeah.
Because if you have your checking account with them, your credit card with them, an auto loan with them, whatever, they think, well, chances are they go to buy a house, they'll get a mortgage with me. If they need a personal loan, they'll get a personal loan with me. They have other reasons for wanting you as a customer. But yeah, they would prefer that you hold a balance and pay interest. The bank would. The credit card company, if we're talking about Visa or MasterCard, doesn't really care.
Yeah.
They want you to just spend as much as possible. They don't care if you pay it off or not.
Their payment processing networks, Visa and MasterCards, are nuts.
Yeah. Yeah. So, and I don't know if they got into that in the debate, or what if they even defined what they considered to be a credit card company. Because if they're talking about the issuing bank, well, then of course, yes, they want you to, hold, America, I heard, passed the $1 trillion mark for credit card debt balance, like as a collective. That's a weird flex, but we did it. USA number one, guys.
Visa
Number one.
Master.
Most of Discover Amex revenue comes from CC debt. Yeah, but like I said, what percentage of the credit card company market are they compared to Visa and MasterCard?
Yeah.
They're niche in that they do both. They do both the payment processing and act as the bank. That makes them a little bit different from Visa and MasterCard. Yeah. So in that case, yeah, they're both the payment processor and the bank, but they make money. They do make money on both ends, though. They just figured. So the reason Amex and Discover do that is they're like, from their perspective, it's like, hey, why let some bank issue the card and make all that sweet interest if people are going to hold balances anyway? We might as well do it and get the transaction fee. So if anything, Amex and Discover were just smart to keep the entire money-making opportunity in-house.
Oh, we have some good questions in the.
What do you guys think about Airbnb? Oh, okay. So I use them. I'll be staying at one in a few weeks. Actually, I'll be going out of the country and staying at an Airbnb for a period of time in a few weeks, and they have a pretty good user experience. But as far as being a profitable business to invest in, I think of them a lot of the way I think of Uber, in that it's a growth story and everything like that, but I don't think the bottom line necessarily justifies the price. Although, am I seeing this right, that 2022 they actually had almost $3 in earnings per share? If that's true,
I'll look at this.
I haven't looked at Airbnb in a hot minute. So.
I like Marriott over them as for like hospitality. That's a company that I've been kind of a little interested in. Airbnb, let's see. Earnings per share. Yeah, $3.07 earnings per share.
Yeah, I mean, they're still definitely at a premium multiple, and I will say,
yeah,
I think, my understanding of their situation is that the market is pretty saturated now with Airbnbs. So we're sitting here with them at what, a 50x, 30x, 50x, very high multiple, right? And I sit here, well, it's 30 times free cash flow and 50 times earnings, I think. So that would imply that you expect there to be a lot of growth going forward to pay that many times today, right? Or, a moat or something like that. And, I don't think necessarily there's a moat. I think there even is. I've seen ads for a competing company that does like the same thing as Airbnb. It's a different app.
Yeah.
And just traditional vacation rentals and hotels are also in a sense competition. I don't know. I don't think it's worth what it trades for today, just on that surface level.
Another area of debate between Dividend Dude as Reggie have been Realty Income and Coke. What are your thoughts on Coke and Realty Income outperforming Frisky?
Coke and Realty Income. Well, those are two completely different animals. So, like, why are we talking about them in the same sentence? Like, can you clarify a little for me?
I believe they were debating about Resi was talking about the underperformance, while Dividend Dude was more relating to the, I guess, stability of them as holdings.
You mean like that they look a little expensive for
They look
what-
expensive and looking like at their performance, including like total returns.
Yeah,
It's
so,
underperformed the S&P.
Yeah, so it kind of comes back. Remember when we were talking earlier about how some stocks might trade a little bit more like bonds?
Yeah.
I think when people look at a company like Coke or Realty Income, they look at, okay, this is probably a pretty safe place to put my money. It provides a consistent yield, and your yield on cost will grow because they do slightly increase their dividends every year, both of them, right? So I think people look at it that way, as it's just like, hey, this is a pretty defensive thing to put my money into. It's not, neither one of them is likely to have, for example, like a big 50% drop in a single year or something like that, right? So it's low volatility, provides a consistent yield where, your payout will grow roughly at or slightly above the rate of inflation. And, for a lot of people, especially people who are, you have to remember, the reason that target date funds, for example, exist is because people's asset allocation generally changes as they near the end of their investing lifetime. They want to get out of, things that are, necessarily aggressive or growth oriented and into slower moving things that'll give them, kind of the tortoise, like slow and steady, consistent, livable income, right? And I think that's, probably the segment of people. Like, you probably got a lot of boomers investing in Coke and Realty Income. Let's keep it real.
Yeah.
And, that it works, right? But yeah, you're not going to probably get a 10x on, Coke or Realty Income. But what
Unless
you will
you get it from the private mastermind Discord.
Yes, exactly. If you get it there, you're guaranteed a 10x. Not financial advice. But I just think, like, people do it because there's less volatility and less uncertainty. The market doesn't, and investors in general, nobody likes uncertainty. They like knowing what they're going to get when they put their money into something. It's comforting. Some people, they can't sleep at night with the volatility.
I don't see a problem buying them, but he also hates ETFs. So
yeah, I don't hate ETFs. I'm just really, really arrogant and think I can do better. I'm just gonna call myself out on that one.
You're a fool. I pray for you. You're paying too much. You overpaid $60 for that SCHD.
Yeah. Well, I will say, I think the S&P as a whole is overpriced.
It's been overpriced for 50 years.
I don't even think it's been around for 50 years.
I do not hate ETFs. They're just Dividend Dude. I was like that when I started investing. You will age. I promise you.
That's the thing. If I was going to tell somebody I care about what they should put their money into if they weren't sure, I would most likely, direct them towards an ETF, whether it be SPY, VOO, VT, VTI, whatever, something that they don't have to think about, because the average person, I think, if they're too actively involved, they'll make all the wrong decisions because, again, not everybody can take their emotions out of it. And I think that's why the average retail investor that picks individuals does so poorly. I mean, no sense for valuation hurts too, but they always pick the wrong times to buy and sell.
Yeah.
If something's cratering, they panic to get out of it. If something's ripping upwards, they're like trying to throw all the money they can to get in and not miss it. And the fact is, once you realize it's ripping, you've already missed it.
CNC.
CNC. Someone telling me it's a good buy. I don't even know off the top of my head what that
I don't
is,
either, dude.
But I will. I mean, I'm gonna
Corporation.
Centene Corporation.
Centene, yeah.
I mean, if that's even the right way to say, I have no idea. I mean, revenue growth looks like it's been really good for the last 10 years. $144.5 billion in 2022 in revenue.
Are you looking at these shares outstanding right now?
They diluted up until 2022, and after that, they started doing a small amount of buybacks, according to StockAnalysis.com, which it's a data feed, so it's not guaranteed to be 100% accurate. Analysts expect revenue growth to drop a lot, down to low to mid single digit. Well, they expect it to only grow 2% this year, drop by 6% next year, and then grow like between 4 and 8% the next year. But the further out you get on those expectations, you only have like 3 analysts, and like they all have different numbers, so it's weird to try to average them out. Yeah, I mean, EPS is expected to triple in 2023 compared to 2022. That seems interesting. I don't even know what they do though, so that's tough. Like, I definitely wouldn't, like, if I had a managed care business in St. Louis, Missouri, intermediary for government-sponsored and private insured healthcare programs. Okay, so, all right. It's one of those middleman type healthcare companies. So definitely a lot smaller than United Healthcare, but in that general vicinity. Yeah. I mean, I feel like I've got enough healthcare, but yeah, the financials don't look bad. They don't look bad. And they do seem to be in like a bit of a dippy area right now. It could be good. I need to learn more. Like, I wouldn't completely write them off. I'd probably, maybe watch list them and do a little bit more digging. I mean, their growth has been pretty impressive. Like, as much as I'll complain about dilution, their growth way outpaced their rate of dilution. So they were doing it efficiently, at least. Like, the problem I run into is when a company is diluting like 250% and they're growing by like 20% or something. It's like, that's not good for shareholders.
Yeah.
So the problem with that blend of ETFs is like you're going to get a lot of the same holdings twice.
Yeah.
So it's not as diversified as you think. because VOO's got 500, SEHD's got 100, but a lot of those are the same companies. Like almost all of the companies in SEHD are also in VOO. It's just VOO has 400 other companies, and so now if you wanted to just go with one index, you could just go with VT, which is the total world stock market index fund, which has like 2,000 something stocks weighted by market cap. So you would have all of the companies in all three of those ETFs, but no doubles, basically. But the international stocks have underperformed American stocks for the last 40 or 50 years. But where is there more growth left to be had now? Is it the US or is it the rest of the world? So those are some considerations there. And that's part of why I've got BABA. Because I think for the next maybe 20 or 30 years, the Chinese middle class growth is going to sort of be similar to what we saw with the American middle class from like the 60s through the 90s. Still think US will grow the fastest. Well, that's just empirically false. We are not the fastest growing economy in the world, not even by a long shot. Our GDP goes up like low single digits now. And that'll probably about be where it's at. Low to, if we are lucky, like we consider 4% to be like a boom here, So the idea that like that's patently absurd, I would almost say, that US will grow the fastest. There's so many emerging economies too. Like, all right, here's one of the ways. There's two things you need to look at. One, population growth, and two, per capita GDP growth. Per capita means how much is your GDP growing per person, and population growth, that's how many new people you're adding to that economy. If both of those things are high, you're going to have a really fast rate of growth. Both of those things have slowed down tremendously in the US in the last couple decades.
Yeah.
India probably is like 20 years from now, they're going to be the ones we're talking about. Right now, we're talking about China because they're the closest to catching up to where we are in terms of their, I think we're roughly 24-25% of global GDP. China's like 17%. They're in second place. And that's why the conversation is all US and China right now. But India is going to be the one that just, and then, Africa, the whole continent of Africa after that, I think.
Speaking of China, a company reports this week that is heavily concentrated in China.
Is it Alibaba?
Starbucks.
Oh, it's Starbucks. Okay.
And of course, we're going to talk about Starbucks.
We love Starbucks, yeah. So, Starbucks, how much do they sell in China? I just can't wrap my head around people outside of the US being that enthused about Starbucks.
They had a lot of growth. I'll look. Starbucks store.
I just think of them as quintessentially American,
Yeah.
But I guess, we saw McDonald's is the same at one point in time, and I've seen them in other countries. So I've actually ordered from McDonald's in 2 countries outside the US.
Wow.
Yeah.
They operate over more than 6,000 stores in China.
Wow.
Yeah, they're big in China and they're still expanding too.
Yeah. Don't they have like 20,000 in the US or something like that?
I'm looking at that right now. They have worldwide. They have 35,000 Starbucks. So it's still a very solid portion.
Yeah. I mean, that's we're close to 20% of it being in China then. That's a lot. That's a lot of stores in China, for sure. And yeah,
What
as
price-
the Chinese middle class grows, their demand for overpriced, very sugary lattes and such will expand with it, as well as their
Yeah.
waistlines. So
Yeah.
yeah.
What
That's
price
just
would
the
you buy
natural order.
Starbucks at if it would it become attractive for you?
What price would it become
Yeah.
attractive at?
Yeah.
And I have never. I don't think I've ever once bothered to run the numbers because they've been too far off for me to even consider. But why don't we take a quick look at some things? All right. Some forecasts. Okay, so analysts are expecting double-digit EPS growth for the next 4 years. Okay, well, dang, I guess
And it's a big market.
I might have to. All right, what's their EPS expected to be in 2023? Okay, we will be generous. We will start from there, and we will. All right, I'm not going to give them credit for a 20% growth rate for 10 years because that's nutty. Just count for this. Okay. $70 or so.
Yep, I was gonna say that. That's my
Yeah. Yeah, that's where I think I'd be taking a hard look at opening a position. So, I mean, and that's based off of like 2 minutes of analysis, but honestly, like I don't think it should take you that long to come up with a provisional target for a company if you understand what they do and you're capable of looking at the financial statements and the analyst projections. Now, some people might think I'm just being cheap that way, but I think that if I was going to want to get a market beating return, I only used an 11% discount rate for that number. So it's not like I beat it up a ton. I gave them credit for 15% EPS growth for the next 10 years, dropping down to 6% after that. I mean, I think those are pretty reasonable. They're conservative compared to analyst estimates, but reasonable. Yeah, Rezi, I wouldn't tell somebody that they're making a giant mistake if they paid 85 instead of 70 or 75, right? Where I kind of start to question people is if they were to tell me that, they think it's like, let's say it was 200 a share today and they're telling me that's a good deal. That's where I would start to be like, or even, 150, something like that. When we're talking about being like that far off the mark where we're not even in the same, it doesn't even seem like we're talking about the same company at that point or looking at the same numbers, right? I could see how you could look at today's numbers and come up with 85, right? But if I pay a little bit less than other people do, my return will be better than theirs. So
this is a cheap price, guys. I went to a Starbucks this morning and it was packed to the brims. The drive-through was going into the street. I think 160 is just the start for this company.
Yeah, that is about the level of due diligence you usually see on YouTube. Hey, I will say Texas Roadhouse was packed. Therefore, the steak was good and the place was packed. Therefore, you can pay any price for the stock and it's a good investment.
Acceptable.
Okay. Somebody just opened a nice door for me.
Oh boy.
So,
well, I went to AMC to watch Art Barbenheimer and Barbenheimer, and it was packed beyond the roof. They're making money.
So, one of my most controversial videos recently was my AMC video. The biggest criticism I received, and a video on AMC is always going to get hate comments, and no matter what you do, right? But they said this isn't about fundamentals. The fundamentals don't matter. Ladies and gentlemen, if you're buying a company and planning on diamond handing it, eventually the fundamentals do matter. Because if you diamond hand it when they go bankrupt, you end up like people who had Bed Bath and Beyond and Tattooed Chef.
Yeah.
On a long enough timeline, the fundamentals always matter. That's something I'm trying to, drive home to people, because there's a lot of people buying companies like AMC convinced that if they just sell enough popcorn or have like a good weekend because of Barbie and Oppenheimer, that things are just going to turn around. And it doesn't look like that's the case. It really, really looks like they need to issue shares to fund operations for the foreseeable future, or take on debt, or some combination of both. And it's getting to the point where it's looking like pretty much completely unsustainable just based on the numbers. And if you're diamond handing it at the point where they become insolvent and have to file for bankruptcy protection, you lose all your money. And that's why the fundamentals matter. But yeah, there are, and somebody was like, oh, well, they're oversold and this and that. Yeah, you can play technicals if you want, but there's other companies out there with volatility that aren't about to go bankrupt. Why don't you do your funny little technicals, day trading, mumbo jumbo with that stuff? Do it with something that's not going to go bankrupt.
Mm-hmm.
Why not? Like, why AMC? That's the question I would ask for those people.
I'm mad because before GameStop had that huge spike, I was considering buying it. Because I was in the phase of my investing journey, I guess, where I was buying what I know. And they were going to sell the PS5s and Xboxes that winter. So I was like, hey, what? And it was only like $5 a share. So that's like, what if it goes up? Because of I don't know. That was my investing terminology. And then the GameStop thing happened.
Yeah. So Dividend Dude asks, what do we think about Pfizer?
Boo.
So, all right. I don't have an issue with Pfizer, AbbVie, GlaxoSmithKline. Pharmaceuticals are fine. All right. But if you're going to be buying them as individual companies and putting, a good amount of capital at play, I think you need to understand the pipeline pretty darn well, because patent protections are limited. So just because, for example, AbbVie has, 40% of their revenue or whatever it was coming from Humira. Now, I think it's less today. I think that information is like a couple years out of date. But, you're looking at this stock that has a huge chunk of its revenue coming from a single drug that treats a lot of people with a common problem. And they're the only game in town while the patent's good. Now, that eventually goes away. Generics can come in and take some of your market share. What then? And this is true for every pharmaceutical company. Patents only last a certain amount of time, and eventually the time will come where there's competition to treat that specific illness, or somebody comes out with a better drug that does it with fewer side effects, or better price point, something like that, right? So you have to really, really, really understand the pipeline, I think, to be able to assess what the future of the company will be, because investing is more about the future than it is just where they're at right now today. It's also about where they're going. And with drug companies, the best way to know where they're going is to understand how good their pipeline really is. So if you have somebody that and trust, that's like, a doctor, a pharmacist, a chemist, some type of research scientist, somebody that knows more about.
I was going to tell you, I texted my uncle, who's a doctor, and I asked him, I asked him a really generic question. I'll pull it up just to reiterate what I said. I asked, how active are AbbVie drugs from what you see compared to other pharma companies in your workplace? And he told me he couldn't give me a reliable answer to the question. What should I have asked him?
That depends on how much like reading he's willing to do on your behalf. But I would have asked him, like, so on AbbVie's website, you can pull up their pipeline and you can do it on Pfizer. They that's one of the things they make pretty easy to find for investors. And I would just pull up that page and say, and ask him to like read like what they're doing, like what stage of the trials they're at, what the disease is that it's treating, and be like, hey, how common, like what's the market, like how many people have this, ailment, and what's the market for a drug that treats X, Y, or Z thing, and if he could look into the results of the trials, like, are these good results? Do you think this is going to get it? Like, do you think that something like this is likely to get approved? Does this look like a good result to you? Somebody that's in the medical field would probably be able to answer that a little bit better than you or I. Just a thought. Yeah, but I would have them like actually look at the pipeline and offer some thoughts on what they're seeing there, more so than, the basic question of like, oh, how, what are you seeing with their drugs? Because they're honestly, in the moment when they're prescribing something or, handing out prescriptions or whatever, they're probably not looking at which big company manufactured the drug necessarily. Unless it was a COVID vaccine, in which case, like, that's how, like, everybody got either the Pfizer, the Moderna, the J&J, right?
Yeah. Yeah, Rezi here with some real nerve, asking me how many stocks I not regret not buying that he brought up to me this far. And I think he's referring to UNH, which is trading near like $500 now, and he told me to buy it at $440.
Yeah, that doesn't bother me at all. Like, the one thing that does bother me is that I sold puts on Meta when they were between $120 and $88 a share. Never got assigned once. That ticks me off a little bit, mainly because I did the thing that shows that I'm like correct in a sense, because selling puts is generally considered a bullish strategy, and I never got assigned, so I missed out on Meta ripping and tearing. But I still got my premium, and sometimes you just gotta take a small win.
So I'm very close to my projection. Remember you asked me last week if I think I hit when I hit 1K?
Yeah.
I told you by the end of this week. I'm 4 away right now.
Whoa, 996.
That bet. Yeah, that bet.
I just
margins.
I just passed 600. Finally.
I saw that.
I had a little bit of a, I don't know, hit a little bit of a stall, but the new thumbnails seem to be getting new eyes onto things. So
that's good.
I'm going to continue to develop the thumbnail game.
What I found,
apologies to everybody that loved the memes.
With thumbnails, I've just started doing like more consistency, like when it comes to like the font and like placement of everything, and it's helped a lot. I don't know why, but it's helped.
Well, I don't know. I think there's just like I think there are just certain things that like make a thumbnail seem more clickable. And I think, like, if you, for example, if you have text in the thumbnail, making it like pop a little bit.
Yeah.
So that it makes people like, I find, I think about my own browsing on YouTube, right? Like I'm sitting there, like, have YouTube pulled up on my PS4 or whatever when I'm sitting on the couch, and I'm just like surfing, looking for something to click on. A lot of times, if the thumbnail like has words in it, like that like kind of pop out, I'm reading that before I'm even reading the actual title of the video.
Yeah.
And if it catches my eye, I'm more likely to click on it. And I think it's just putting yourself in the shoes of like a person who's browsing YouTube and saying, would this bait me to click on it? And if it would, then it's probably a pretty decent thumbnail. But it's definitely a skill though. Like, yeah. Like, because I've never really used any like Adobe or anything, and that's what I've been using is Adobe Express. I meaning to try out Canva per your recommendation.
Do it. You will
But,
not regret it.
I don't have any issue with knowing both, because they both probably have different sets of like stock images and things like that to choose from. So it's probably not a bad idea to have both kind of in my pocket as tools to use. And I do, it's fun to learn a new skill, and thumbnails are definitely a skill. Yeah,
they are.
Yeah, Dividend Dude's working on his thumbnails too. Yeah, I will tell you that just you can for a while get away with just mashing something together in Paint if it's like a meme and some people will get the joke or find it funny. They will click on it just for that. But there will be a stalling point eventually. And you have to, and that's the thing, if you hit a stalling point, you have to recognize, okay, I need to change something to get new eyes in the door, but that won't alienate the people that are already here.
Yeah.
And thumbnail is one of the easiest ways you can do that, because it doesn't necessarily change the heart and soul of what you're doing, with your content or what the subject matter is. And you can still work in your, inside jokes and stuff. Just put them in a thumbnail that pops a little more visually,
Yeah. Oh, you'll appreciate this. I'm making a portfolio review of one of your favorite YouTubers.
A portfolio of favorite YouTubers?
Portfolio review.
Portfolio review?
Joseph Moneybags.
Joseph Moneybags.
Joseph
Wow.
Carlson.
So you're going to review his portfolio?
Yeah. He gave me permission.
Did you or he makes his public, doesn't he?
Yeah.
Is it the 500K one that I see he has on M1 Finance?
Yep.
By the way, everybody, sign up for M1 Finance with the link in my description. Deposit $5,000 and you and I each get $100 free. It's awesome. You can basically use the pies feature to build your own ETF with whatever market cap weighting you want, as far as the proportionality of how much each stock makes up in the portfolio. You just set it. You can pick 20 different stocks, set them each to 4%. You can make one of them 5%, another one of them 1%, and everything in between, and just hit the rebalance thing, and it'll do all the buys and sells and whatever to make it perfect. It's pretty cool.
Yep.
I bet all the big fund managers just do that and then still charge you like 0.6% or whatever for the privilege.
0.7 actually, 0.75.
Yeah. What does Kathy Wood charge for ARK?
0.75.
Oh yeah, that's who you were thinking of, huh?
Yep.
So yeah, imagine getting charged 0.75 just to buy like Tesla, Roku, and Teladoc or whatever it is she's got in there. Crazy. No shame. Exactly. Dude, you can't have shame in this business.
Yeah.
This is a business, not a charity, okay?
Yeah, there's no friends in this business.
ABC, always be closing. If you're not moving someone towards your Discord, link in the description, to your membership program, link in the description, or to your affiliate link for M1 Finance, link in the description, you're not doing it right.
All free until the first month. All free for the first month. Get your 10x stocks. Frisky.
Well, I don't think I think as of this moment, FTX can't afford me.
Yeah.
I don't come cheap.
We have high bidding war on us right now.
Yeah. Well, I'm sorry. I don't come cheap unless, of course, you're a channel member. Remember, it starts at only $1 a month. That's basically less than a nickel a day to get my due diligence on things like Texas Roadhouse. I can give you guys extra. I can do members.
I'm a channel member. He talks to me more than he does to his own family, so it's value right there.
All right, they may see this and kind of called out, because that might actually be true, because we have a scheduled time every week. Oops. Yeah, I'm totally bad at staying in touch with people and things like that. But you know, actually no, shout out. I did actually have lunch with my cousin this week. She was here for a work conference, and we went to a kind of divey Mexican place, and it was safe. Nobody got food poisoning, and yeah, it was quite nice.
Are you by Phoenix?
Yeah, I am in Phoenix, the one of the hottest places on earth right now.
You ever
And
go
I
to
mean
Ted's
that-
Hot Dogs?
What hot dogs?
Ted's Hot Dogs.
Ted's hot dogs. That does not sound familiar to me, but I will look it up and see where it's at.
It's a Buffalo place.
Ted's hot.
Resi might know.
Okay, so there is East Broadway Road, Tempe, Arizona.
Yeah, Tempe. Yeah.
Okay, yeah. I've been to Tempe, but I have not been to this particular hot dog place. But I'm doing some due diligence on their website right now as we speak.
Yeah.
Oh,
That's
okay.
that's competition to Tyson Foods, so we're doing our due diligence.
I am bullish on those onion rings.
He asked if you bought the dip on Texas Roadhouse.
So no, I did not. I did not buy any Texas Roadhouse. Don't have any. The due diligence thing, that was, in case you couldn't tell, that's a joke. I just really like Texas Roadhouse, and more so just because of the food, not because I'm necessarily interested in it as an investment. Though if it dipped low enough, I probably would. I haven't come up with a provisional target or anything on it. Just one of those things. I really, really do dig the dinner rolls and the butter, and of course the meat. It's all about the meat.
Yeah.
They treat that, they hand cut that steak, my friend.
I've been to Texas Longhorn Longhouse. I don't know. That's one.
Oh,
of them.
Longhorn Steakhouse, yeah.
Yeah, it's solid.
Well, it's funny there because basically there's one like right across the street from the Texas Roadhouse I went to. And when we were at Texas Roadhouse, and I really hope the stock doesn't drop because of this, but my buddy got a piece of silverware that like had something on it, and like asked for a different piece of silverware, and he was like, I bet it was Longhorn sabotaging them, planting the dirty silverware here because they have inferior steaks to Texas Roadhouse.
I can't eat at Texas Roadhouse. I got the peanut allergy.
So so here's the crazy thing. I was in there. There were no peanuts in sight.
Really?
Yeah. When I went years ago, yeah, they definitely had the peanuts. I did not see any peanuts this time. Wonder if they stopped doing it.
That's due diligence.
I know. I'm doing this for you, man.
Yeah,
More
I
so
gotta
than myself.
look this up. I wanna.
Because I'd be really sad if you could never enjoy the 23-ounce porterhouse medium rare that I enjoyed. So good. So good. I mean, it'd be better if I owned the stock and some portion of that money I paid for that steak was going into my dividend check. That would be kind of sweet, wouldn't it?
How much did you tip your waiter or waitress?
So my buddy and I, we went together.
Nothing.
We split the bill. We each spent about $40 there. On a $40 tab, I tipped 10.
Oh, that's good. That's really good.
Yeah. By the way, yeah, I always tip appropriately and
Putting the
err on the
members,
side of generously.
the membership money to good use.
Yeah, I never.
It's going. It's a full circle.
Yeah. Well, here's the thing. It's one of those things. It's like, hey, if I'm going out for an experience and there is a person, assigned to my table, ensuring that I'm having the dining experience that I paid for, I think they deserve to be compensated well for executing that job well. So, I know that the restaurant itself is paying them about like $2.13 of that. And so I'm, I go in with the knowledge I should be making up the difference. And my friend tipped basically identically. Actually, he insisted on beating me by 6 cents just to beat me on something. So, yeah. Because I went first, and then he looked at what I did, and he just literally added an extra 6 cents onto his. He said it was to make his an even number, but I think it was just to get one over on me.
Yeah. Did you ask the waiter or waitress what the experience was like working there and do your due diligence? You know, how long they've been working there.
So we made some conversation. She told us that she was new. And like every
capital expenditure.
And every 45 minutes they stop and like kind of do like this little song and dance thing to whatever country song is playing in the background. And she said that she liked that because it was a good way to like kind of break up the day and like, you know, do something a little bit different, not get bored and not get like, and like kind of relieve the stress in the room or whatever if they're busy and that kind of thing. And yeah, it seemed like she was saying it was a pretty positive experience working there so far.
Due diligence.
All right, so I just want to address this. Hint: always tip cash. So no, I mean, I would in this day and age, I would not worry about always tipping cash. Like if I suspected that the place I was eating at was like shortchanging the staff on getting their fair share of the tips. Like some places pool them, sometimes it goes directly to the person. And you know, I don't have a dog in that fight, but I will say, like, if they're supposed to be tipping out like the dishwasher and the bussers and stuff like that, like I would want to do it on the card so that those people aren't getting shortchanged, right? And if I suspect the place would be like shortchanging anybody, I would definitely not eat at that place. If the place treats their wait staff like dog shit, I will not be attending.
Well, John works at a restaurant. His family owns a restaurant, so he's got some inside info, possibly.
I hope he's not saying that they don't admit that, because that's
John just. Oh, he's talking about the credit card fees.
I mean,
it's good for Visa. Then it's full circle.
Yeah, I mean, I own shares of Visa and I paid with a Visa card, so I got to get a little something for myself out of this. Right? But no, I get your point. But like, I'm not gonna sit here and just carry cash with me all the time, unless I'm in another country where I'm worried about credit cards not working 100% and that kind of thing. Yeah, Resi loves it when we pay the fee. So, and here, and you know, the other argument I would have is that like if I'm overshooting it on the tip, like is the fee really, or is it that the restaurant is getting charged the fee? Does the restaurant pay their like the whole fee if part of it is run as a tip? Like I don't know how that works. I've never worked in the restaurant business before. But yeah, I do think that you should always tip generously, assuming that the person didn't like literally like cuss you out or something, you know? Just carry $200. My Amex has 6 times on dining, so I tip with the card. It's baked in. Yeah, I've been thinking about getting an Amex. It's actually the only thing I don't have. I have Visa, Master, and Discover. Don't have Amex.
I'm getting a Discover. It's secured when I turn 18.
Yeah, so Discover It was I got that one in my early 20s. It's, you know, people talk trash about Discover, but it's been a good card, and they've had a real focus on being able to reach like US based customer service on the phone if you need something, for example. And, you know, I think that's I think that's pretty customer focused, customer experience focused. Obviously, they can't compete with what Amex can with the points and the perks and all that stuff. But yeah, Discover's, I think, solid choice for a first card. Some places don't accept it, but the vast majority do. Yeah, Rezzy's agreeing with me. Amex customer service is top tier. Yeah, for sure. Yeah, I'm not. Yeah, nobody can compete with that because Amex specifically caters to people that can spend a lot every year on their card. That's why they have all those different rewards, and they have their airport lounge and all that other stuff. They want people who live a certain lifestyle. Yeah, I would say it is best of the best. If they were taken everywhere the way like Visa is, yeah, that would probably would have been like the first credit card I would have wanted. But now that I travel more, though, I do think I would probably want.
So the restaurant waiters keep all the tips. We take none.
Well, yeah, ownership shouldn't be taking any of the tips for sure. But I was more thinking like some places, yes, initially the tip goes to like the wait staff, but then like it gets divided, like it gets put into a pool and divided with like whoever was bussing the tables that they worked on that night, or the people who are washing the dishes. Like in a lot of restaurants they have something like that where there's like a sharing that goes on. And I'm not going to get into whether I think that that's like fair or not, because like I've honestly going to call myself out a little bit. I've never worked in that industry before, so I don't know what feels fair if you're doing that job. But as a consumer, I feel like if I'm tipping appropriately, I'm doing my part. Your person doesn't take tips, so the girl makes 30. How? So she's a waitress but doesn't get tips? Is that what you're saying? I might be reading.
I think he's talking about that his mom doesn't take tips from the other waitresses, or I don't know.
Well, yeah, I mean, I suppose, yeah, that makes sense, but no, I'm more talking about like them sharing with like the bussers and things like that. But that, honestly, some people think that the whole, like, the restaurant can pay their wait staff like $2 an hour because the customers tip. A lot of people think that whole thing is silly and should just be like same minimum wage should apply to restaurant workers, and a tip should just be considered a bonus. That's actually the way it kind of is in most other countries, but like it's so ingrained in me that like I don't tip differently when I'm somewhere else. I'm just like, no, I'm gonna keep doing it. I've been conditioned. But on the other hand, I have seen a lot of. So I used to read stuff posted by wait staff. There was like a Facebook group or something back in the day. It was all wait staff who like were complaining about people who don't tip or don't tip well. And one of the biggest complaints they had was like foreign people visiting the US who don't know the situation.
Oh.
Like they have like, because people in other countries, like they have to actually like pay them appropriately.
Yeah.
In other like it's like any other job. Like your employer pays you to like, serve tables or whatever. So like tipping just isn't a thing. Well, it is, but it's not like a requirement or whatever.
Yeah.
But here it basically is, because you can't make a living if people don't. And so like people coming from other countries who don't know that end up like not leaving one, or not leaving one that's like the normal amount that we would. And it definitely ticks them off. But at the same time, like, whose fault is it? Is it our fault because of the way it is here, or is it the fault of the foreigner for not knowing what the local customs are when they tour here?
We had a foreign group of people come in and eat like a 400+ check, and they didn't tip. I want to go to Rezzy's Pizza Shop
there you
and
go.
do a review.
Yep, showed my receipts there. Like yeah, you hear stories about that all the time. Yeah, I would say if you're traveling to another country, try to understand as best you can what's normal for them and what their customs are and things like that, because you don't want to be the person that goes somewhere and doesn't tip because you didn't know better. That's awful. It's awful. Let me see here. Any final topics you want as we are approaching the 2-hour mark?
Not that I know of. Besides that Starbucks is going to beat this week.
Well, if they don't, I will give you a hard time about it next Sunday.
Yep.
Let's see. Oh, all right. Let's see. We had a couple more comments here. Oh,
got to do your due diligence in Italy.
So, Rezzy, okay, you said an 18-day cruise. So, are you going to get a chance to see Venice?
And are you going to still be active on the private mastermind Discord? That's the real question.
Because if you go to Venice, if you're interested in like buying anything to like either like send home to yourself or take home, there is a shop I'd like to recommend. I'll send it to you on Discord.
Anybody have any final questions for me?
Yeah.
Yeah.
I mean, yeah, does anybody in the chat?
Oh. Whoa.
Yeah. I'm giving him one last shot, man.
Yeah.
Okay, Alex wants
1,000 subscriber gets a I'll give them $5 with a Starbucks stock.
Yeah, I think you're technically not supposed to do that. So
you can get people stock.
Well, so all right. In the lead up to having my channel get reviewed for monetization, I read the terms and service. I know. I actually read the terms and service, and I think like specific subscriber giveaways are not allowed anymore.
I think you're right. Now that I think about it.
So sorry, guys. No $5 of Starbucks stock unless you join the private mastermind Discord. Link in the Discord.
Jeremy just posted a video. Look at the thumbnail. What happened with Dustin? Okay, I will explain exactly what happened, Jonathan. As the little MMA connoisseur that I am. Gaethje is not known for throwing head kicks. And Gaethje did a very good job of realizing Dustin was ducking his head left every time. And it was the perfect combination of throwing something that he wasn't going to expect throwing and realizing a pattern. And I knocked him out that way. Let's see Jeremy's thumbnail.
All right. Put it up on can you put it up on screen? You have the access to do that?
I don't think I do. I'll tell you if it's worth putting up or not. No, it's not. It's the same one. It just says boom.
Is it him doing that same dumb face he always does in every thumbnail?
Yeah.
Yeah. The Jeremy. Looks like he's about to take a vegan sausage in the mouth.
Dustin was, yeah.
All right. So, yeah. You know what? Actually, maybe save this one for the next one, but I want to talk a little bit about the WWE UFC merger thing that was.
We will save that for the next one because I gotta put that in the thumbnail.
Yeah. There's just I have questions, and I know you know a lot more about it than I do. So, all right, everybody, have a wonderful night. we will be doing this again next Sunday on Ryan's
Yeah.
channel. Link in the description. You all know him. Join his Discord too. Hey, subscribe to his channel. Get him his 1,000th subscriber. Damn it! God damn it! All right. So,
All right, guys.
I think there's one last thing that Ryan needs to say.
All right, guys. Well, of course, we're having a very fun live stream, a shareholder meeting, as some would say. Very optimistic of the future of this business and channel. We're going to have a healthy and competitive channel relative to the others. And of course, stay safe, you guys, and do dividend stocks and trucks. Have a good one.
Farewell, everybody. See you next Sunday.